Hey friends, Ernie here with the Trader of Futures. It is Wednesday. Can you imagine that? It's Wednesday already, September 5th, 2018. Wednesday, hump day, and a beautiful day here in the Northeast. As you can see, the sun is shining, it's warm, still feels like dead summer. I'm just hoping that this weather just continues right through winter. Who cares about I invite global warming. Perhaps that's a bit selfish, right? But global warming, I think, is good. Today, got a lot of people asking me questions about my trading strategy. And, how do you keep control? How do you preserve capital? How do you know whether or not your strategy or system is a profitable one? We'll talk about all of those things. But today, I want to concentrate on this mantra that I have. Let me back up a little bit and talk a little bit about trading strategy. Coming into the market, footloose, just everything's on a whim, completely discretionary, might work for you for a little while, but over the long term, unless you're either lucky or you have an innate ability to pick winners, which is also, probably partially luck. But there are some people out there like that. There are some people that just win all the time, and we hate those people. Relying on that kind of attitude, I'm not even going to call it a strategy, is going to get you in trouble sooner or later. Sooner or later, unless you make a crap load of money and you can weather through it. But eventually, you're going to give a lot of it back and you're going to feel bad. You need to have a longer-term strategy. Now, I talked about this to somebody earlier today, but I'm really referring to a number of people that have sent me emails asking me about the whole idea behind capital preservation. I say capital preservation first, profit second. And that might seem antithetical to most traders. Why would I put profit second? Isn't that why I'm in the game, is to make profits? Well, the answer is absolutely you're in the game to make profits. But more importantly, if you make those profits, it's more important to hang on to them, because unless you can hang on to them, you cannot do the second thing that is most important. Actually, this is the number one thing that's most important, and it's the ultimate goal, and that is to build wealth. Building wealth is the number one goal. How do you get there? I talked about that a little bit in the previous sessions, where I said that you need to develop multiple streams of income. And why do you need multiple streams? Because often one stream just isn't good enough. If it breaks down, or you have more than one stream that are dependent upon one thing, that can really hurt you. Trust me, I know this from personal experience, and I've seen it too many times. That you must develop cash flow. Now, you don't develop cash flow with your trading. That's not what trading is for. Trading is not for developing cash flow. I've often said this, that the idea behind creating an income with your trading is ludicrous. No professional trader worth his salt develops an income, a regular stream of money, by trading. Not possible. Doesn't happen, ever. It's not part of the game. The market is simply not complicit with that idea. You cannot develop an income with trading. I don't care what anybody says, whether it's selling options, weekly options, or whatever that strategy happens to be. Get it out of your head. You cannot create an income with trading. What trading is good for, and the way you should be looking at it, is as another income stream. All right. Now, it's not a regular income stream. It's a amount of money that you make. You know, in the same way that a job doesn't necessarily have to be an income stream. I mean, if you're a contractor or if you're a consultant, money comes in clumps. That's the way you have to look at trading as well. The problem is that you need many of those types of streams, those clumps that are non-correlated with each other, so that you, when you have an aggregate of them, it looks like a continuous stream. You need things that will provide passive income as well as active income. Developing that stream of income is what is going to enable you to preserve your capital. When I say preserve your capital, I'm going to talk about some strategies, but it's going to enable you to build your wealth. That's ultimately what you want to do. And I said this yesterday. I said that, look at all your different streams of income, whether it's 1 or 5, doesn't matter. How much of that goes towards paying your bills and paying Uncle Sam or whatever tax authority you're beholden to? And then how much do you have left over? And what do you do with that thing that's left over? Well, what do you mean by left over? I mean strictly, let's say that your bills are $5,000 a month and you make $10,000. And then you add taxes in there and it might be another 30%. So it's $8,000 going to bills and Uncle Sam or taxes, and then $2,000 left over, 20%. What do you do with that? Now, assuming also that, you know, your spending and everything that includes your normal recreational stuff. This is outside everything that you spend on food, clothing, recreation, bills, taxes. What do you do with that 20%? Do you put it into your trading account? No, it's not a good idea. Maybe as your first priority for that 20% is to put it into your wealth building activities. Things that will preserve your capital, grow it with, and contribute to your income if possible. These could be businesses, they could be investment property, it could be assets that appreciate on a appreciably over time. You might have to move them around every once in a while. Buy investment grade collectibles. That's another great idea for building your wealth. And this is what the wealthy do. This is what the 1%ers do. Most 1%ers also look very carefully at where they're putting their debt. And we talked a little bit about this yesterday too. Debt, in the view of most very wealthy people, should not be used on your primary residence. As a matter of fact, they say that you should rent the home that you live in and own the homes that you rent out. There are a wide range of reasons for this, from a tax point of view, from an income point of view, from a mobility point of view, and a freedom point of view. I know that's not the reality for a lot of people, and I'm professing something that I don't even practice right now, although I do both. I have a mortgage, but other property as well. So we're going kind of round circle. This is sort of big picture. Your trading account is just another engine. Think of that trading account like a job or another business that is producing income. That is what your trading account is for. Your job doesn't dynamically grow on a day-to-day basis, so why should that? Why should your trading account? You keep it within certain parameters, and then when your overall wealth grows, then all the other things can grow. Or you can selectively choose what grows. Then maybe your trading account grows. I'm reading the couple of the comments. All eyes on me says, "Get 'em, Ernie. Cheers, coach. Along for the ride today. I create wealth with investing, not income from trading." Yeah. So investing is another way to create wealth. You can have a wide range of investments. They can be property, business, stocks, bonds, treasuries. As I said, investment grade collectibles, paintings, antique cars, coins. And I stress investment grade, because if you don't get investment grade, a lot of those collectibles are worth crap because nobody's going to want to buy them and they won't appreciate it. So getting to the main topic here, and that is preserving capital. See, when you made money, you have to figure out how you're going to preserve that capital in your trading account. And there's a lot of different strategies that you can employ to do that. One of them might be to move money from really risky ventures into things that maybe aren't so risky. So if you have a bunch of stuff invested in cryptos and you want, or even in stocks that tend to be rather volatile, you can move them towards staple type things. Industrials, what do they call it? Soups, soaps. Forgot what the acronym was. Soup, soaps, and paper. Soup, soap, cereal, and paper. Companies that produce things that are everyday staples for the vast majority of people. That would be a good place to move things into that will provide some capital preservation. The ultimate capital preservation, obviously, is to move everything into cash and put it into some CDs. But there you're not going to really make any money, and the chances are with inflation, you might actually end up losing value. Maybe not losing money, but losing a little value. Not much, but it is a good way to preserve capital. Obviously, going to cash is the easiest way. Another way to preserve capital. All right, Ray is saying, Ernie, how about physical precious metals, gold, silver, platinum, diamonds? No, while they may have some inflation hedging, they're not really a great inflation hedge, even though that's what they're largely talked about. Precious metals aren't really very good at preserving capital or building wealth. They might be okay at preserving wealth, so they hold their value over time, and that might be another strategy to capital preservation, but it's not going to help you build the wealth. So, well, actually, I mean, to answer your question, yeah, I guess precious metals in that case, but they work in much larger time cycles. So, but it could be part of the mix. You're better off preserving wealth with things that are derivative of precious metals, like jewelry, investment grade jewelry, or investment grade coins. Not bullion. Bullion is just, another way to collect, to invest in precious metals. But I mean, actual currency, rare historic currency is one of the best growth investments out there. I think it has an annual average growth rate of something like 12%. I mean, it's pretty darn good. Eagles, unless they are investment grade eagles, they're really, I mean, that's just bullion. I mean, if you're going to buy eagles, you might as well just buy bullion. bars, because the only thing that you're going to get from Eagles is the cost of the premium. And unless you sell it to somebody else with that premium intact, you're going to give up that premium when you try to sell it back to the dealer. So I wouldn't say Eagles are the best thing. What do you think about leasing a vehicle rather than buying it? No. Leasing a vehicle for the average person is absolutely the worst possible decision you could ever make in your entire life. It is designed to rip you off if you have no way of deducting that expense. Leasing is really meant for businesses where travel is paramount. Other than that, leasing is a horrible deal. So there's no way in hell that I would ever lease a car. So leasing off the table. Trying to think of other ways that you could preserve capital. Probably the best way to preserve capital is to really have a solid trading strategy and system. Because without a solid strategy and system, you don't really understand where your edge is or what your risks are. And without understanding that, it's kind of hard to tell whether or not you're going to be preserving your capital or not. Are you taking appropriate risk? Is your risk measured? So having a solid strategy and system in place is another really crucial element to preserving your capital. Actually, that is kind of like the linchpin behind everything that you do. You should be concentrating on that before all else. Well, let's say that the first thing you should concentrate on is building the multiple streams of income. Before you even start trading, build multiple streams of income so that you have a degree of freedom. If you lose your job, get to the point where your job is not your primary source of income. Maybe it's your primary source, but it's not the necessary source. You want to have diversity in your income. Once you've got to a point where you have a diverse income, then you can start thinking about moving into trading and adding that as another source of income. Trading is one of the hardest ways to make easy money. What I mean by that is that a lot of people don't put the time into understanding that a proper system and strategies are the linchpin to being successful in trading. You need to be able to trade or execute multiple non-correlated strategies. And I've said this many times. Multiple non-correlated strategies. And this kind of expands out to your income as well. Multiple non-correlated strategies in trading as well as in income generation. That is the ultimate way to produce cash flow and long-term security. What you want to do is get to a point where a certain amount above and beyond your daily bills, your taxes, and everything else. I used the example of 20% before, but I would shoot for 30 or better, 30 to 40%. And then when you make that amount of money each month, you take that amount of money and you put it into your wealth building activities. You do that consistently, and you will make that $1 million. Guarantee it. But, the hard part is getting that stability. Are you a good worker? Do you have a sellable talent? Experience? Don't worry about that. Those are all things that you need to start off with. Make yourself valuable. Make yourself valuable to other people where they need your service. They need your know-how. All of these ways will help preserve your capital. So Crypto Bacon saying, so wealth preservation, basically a constant battle with inflation. No, you want to get way beyond inflation. Wealth preservation, well, when you say it's a constant battle with inflation, it's if you are up in the 30 to 40% range of your total income and putting that towards wealth, you're so far and above inflation unless you're in one of those countries that has 30 or 40% inflation. But in the United States, where, say, inflation is around 2%, putting away 30, 40% of your income is going to produce tremendous wealth very quickly. Boots of Leather says, if you buy a certain amount of bullion, does the shop notify the government? Not that I know of. I know that any transaction of $10,000 or more, monetary transaction, sometimes is flagged by banks. But in general, if they're every once in a while, no one's going to pay any attention to it. So that's really what I wanted to talk about today. Making money or building wealth is your ultimate goal. You want to become a millionaire? Figure out a way to increase your sources of income. Some of those incomes may overshadow others, but do your best, even if that's the case, to turn those into other sources of income. That diversity, that diversification is going to pay off huge, especially in the event of a calamity, like you lose your job, you lose your home, any other thing. Can't express how important that is. And then once you start building your wealth and then build up that trading account, you follow that same strategy in the things that you invest in and the strategies you employ in your trading account. You diversify those, make them non-correlated to one another. This is if you look at, I guess the underpinnings of cryptocurrencies and a decentralized world, you look at the United States and our system of government and the way we've decentralized everything. Everything revolves around the rights of the individual. And everything gets moved out to the individual. Decentralization is a powerful, powerful tool. And that is what we're going for. We're trying to decentralize our lives, decentralize our areas of expertise. There's another good thing. Learn different skills that have nothing to do with one another. Some might be great in the area of finance or any other endeavor that interests you. Others might be more focused on physical things, the natural world, building, construction, survival, interest in different areas. You might have your primary interest, but develop interest in other areas. That diversity is going to help build your wealth. All right. So I don't have much more to say on this, and that's kind of like I'm trying to keep these daily shows kind of concise. If there's more to say, I'll bring it to 45 minutes. If there isn't, I won't bring it much beyond there. But I just want to drive that message home that diversity is the key. Diverse strategies, diverse income, multiple streams of income, passive income as well as active income. Make sure you get a certain amount that you can then put away. Concentrate on preserving that capital before making profits. Of course, each income stream is a profit-generating machine. I mean, that is ultimately what you're trying to do. But I'm in terms of trading, particularly because of its inherent risk, you want to be able to preserve your capital, take profit second. You make profit, do whatever you can to hold on to that. Really important. How about junk gold, silver from pawn shops and smelters on eBay? So no tax man cometh. What do you mean no tax man cometh? An investment is an investment. That you're not shielded because you bought something from a pawn shop. I mean, of course, you can skirt around just about any investment if it's small enough and scattered enough. I mean, the government won't know everything. But, you know, from a bigger point of view, that's not a great strategy. However, I do like junk silver. Unfortunately, it's, you know, I personally think that there's a little bit of variance in junk silver, and I think bullion's probably a little bit better than junk silver. Sometimes you can get good deals on junk silver. I used to do these things called gold parties. You can find junk gold or jewelry that you can melt down. That might be a good source. You can get gold at 50 cents on the dollar that way, and potentially silver at 50 cents on the dollar, where you have these parties and you tell people that you'll pay cash for their old jewelry. They're pretty popular. All right. That's it. That is it for today. That is the lesson of the day. Preserve that capital. Focus on diversifying your income. Your ultimate goal is to take a portion of that and build your wealth. Everything we're talking about is talking about making $1 million. You can do it. Most people can do it in the space of 10 years. And I don't mean making $1 million over that 10 years. I mean accumulating and having a net worth of $1 million. That's very different than making $100,000 a year for 10 years. That's pretty easy to do. All right? That's it. Thank you very much for joining. Please hit the like button. Comment if you can. I really appreciate everybody coming by. I am now off to my other venture, another source of income that I'm developing, and I may talk about that in the near future. It's an exciting, very exciting thing. Not everybody can do it, but it's cool. Take care. See you next video.